Hello traders, it's Samurai Trader here. Welcome to this trading recap. We're going to recap some live trading from, what day is it? From Tuesday the 12th of the 4th 2016. It's the day after Wednesday the 13th today, but I want to go over some trades that I made yesterday. Some live trading. I had 12 trades, 10 wins, one break even, one major stuff up, which I'll cover and talk about when I get there. A loss. Still had a great day, but more lessons for me on the power of focus. Please don't call when I'm trading. When I look back on my trading mistakes, and as most of you know, I'm very active in keeping a trading journal. Probably 95% of the mistakes I make are when I'm talking to people, typing notes, or reading trading notes, or doing something other than being focused on the screen. So once again, traders, please focus. I think it's really important that I show you the mistakes that I make. I'd love to say that even though it was a great day, but I'd love to have not shown you this loss, but I think it's really important. This is how you learn, by me showing you some of the mistakes I've made. So everything I'm about to show you, traders, this will be a public video. And just by the way, for the members watching this, I will be doing a very comprehensive members video straight after this one, which will be posted on my Google Drive. So you'll be able to have a look at that. I've got a pile of questions here. Many of you know I'll be away for a couple of days, so I'm just going to cover all of those and post that in the Google Drive, covering some questions, and also perhaps in depth on a few of these trades I'm about to show to the general public. So if you're new to my channel, please subscribe, and if you haven't ordered my ebook, please go to my website, and most importantly, or even more importantly, please invest $197. This will be this will be your last investment you'll need to make in a day trading or swing trading program. I give you 12 of the world's best day trading strategies, and hopefully, traders, what I'm about to show you and will prove to you that what I have is just virtually, you really can't put a value on it. Before we go to the charts and go much further, please, if you're new, please understand the risk of trading. You don't trade with the rent money. Please stop and read the risk. Very important you understand the risk in trading. And why I think of it, remembering what I'm about to show you is applicable to whether you trade stocks, forex, or futures, and it works on all time frames and all markets. So also, if you could go to full screen, because we're about to look at the charts in a moment, and bottom right hand corner will allow you to do that. So really important, traders, before I go to the charts, I just want to say this, that trading is not rocket science. Trading is a pattern trading exercise. Actually, that's meant to say a pattern solving exercise, because that's really what it is. I trade patterns, and it makes it very easy to pick up these patterns. If it was a 100% mechanical system that required no input from the trader and earned the daily profits that a day trader can earn per contract traded, it would sell for tens of millions of dollars. That's why institutions still employ hundreds of traders and just don't rely on computers. I've seen hundreds of automated trading systems over the years come and go. Markets change. There are volume issues, price spikes, we have red flag news announcements, and on top of that, traders, we now have high frequency trading. Nothing beats the fastest computer in the world, and that's our minds. We can recognize a high probability pattern in the blink of an eye, check if it meets our rules in a few seconds, and have the trade on within 1 or 2 seconds after that, thanks to modern technology, our modern trading computers and trading dames. So what you're really looking for is patterns, and what I'm about to show you, every trade setup I'm about to show you is actually a pattern. So personally, I'm a momentum trader, and that's also very important. I don't like range bound markets. In other words, I want to see the market moving, which is really important. So just before we go to the charts, what I want to say is this, and I know many of you hear me talk about this every day. My job as a trading coach is to help you become successful, to join the 5% club. Now, the only way you're going to join the 5% club is if you master the head stuff, because when it comes to trading, traders, And you need to hear this again if you're experienced. 5% is money management, 5% is your trading strategy, but a massive 90% comes down to the head stuff. That is how we think, our thinking processes. What are we focused on right now? What are we thinking when we're trading? This is excuse me, very, very important. So let's just before we go to the charts, one more thing I want to say: follow the gold and let's keep it clean, and you'll see what I mean in a moment. I rarely refer to any other indicators on my charts now other than my moving averages. So if you're a new trader looking at the charts, yes, it may appear I have a lot on the charts, but in actual fact I could strip a lot off, and I leave a lot more on my charts for my members more than myself now. And that is really, and for my members watching this video, that's really the end goal, is to strip the charts bare. The less things that we have to analyze, the better it is. Price action is the best. It's non-lagging, and what we do know, of course, that our indicators do lag. So let's go and have a look. So let's flick across here. What I wanted to do is just quickly show you a couple of trades from the day before yesterday. So going back to the 11th, and the reason I want to show you, because I'm going to show you a total, the one that I totally stuffed up. I just wasn't thinking. I was on the phone at the time. Actually, I was on Skype at the time, look, I just took a blase and I made a real error, a couple of errors, which I'll explain. But it was this setup that you're going to see here. You working on a rising long-term stochastic, a higher high. Natural fact, I was going short on the other trade, but I jumped in on it. Now this is good for 750 for 6 ticks. Most of you know, and let me just re-emphasize this: I'm a scalper, and it's really hard as a 20+ year veteran to break the habits of scalping. That is, you can see there I could have picked up at least 10 ticks on it, which is what's that, $125 per contract. So I'm really looking at retraining myself. But let me tell you, as a scalper, I'm so, I do really well at that, and it's hard to break the habit of scalping. But there's another reason why I exited. Would look at that is usually we get a bounce off the 89. But without digressing, when you see this stuff up I'm about to show you, it's this pattern here, and just on the top one here, this was a T89 I had right here, which is a very high probability trade. But what I say to traders is this, that they were both counter trend trades, and when I show you on my own personal trading chart, you will see that I take quite a few counter trend trades, but I'm profitable as a trend trader. So what I highly recommend you do, traders, is don't even consider counter trend trading. Follow the gold, and this is the gold. Okay, just follow the gold, follow in the direction of the 34 EMA until you are consistently profitable. Now also for my members, you'll see there's a ton of other trades that I haven't taken on the way. Well, this here of course was our classic 34B and virtually a 200 and an 89. Why didn't I jump on that? Because I was already short on this one. So very, very important. And just over here, this is the day before. This is just another one of the other trades. I had this was a T20 I shorted, but I got out here because of a pivot, which is another thing you're going to see on this massive stuff up I had, and you'll see I was right against the pivot, and you'll see me time and time again exit at pivots. So anyway, let's go and have a look at yesterday's trading. Now remember on the last chart that I showed you from the day before, it was exactly the same pattern, except I don't believe I had the T1 plot. And you can see here I wasn't even trading at this time. I'd traded for 2 hours yesterday morning, so I was having a bit of a break, come back on, and I'll show you these trades up here. But that was a classic. This is a classic pattern. You can see here the market closed, it reopens, we gap down, lovely T89. So you could have got in on this T89, or even this what I call a T9, which is a high low, and this is a very high probability trade. And right here, traders, for my own traders, what we had there was a T20. We had some T2s, but let's get along to the trades that I did actually take. There's a ton of other trades, nice trades on the way through. So let me just explain these here. There's actually 3 trades in this particular area. I shorted a T19 right here. This is the first trade I entered, and it went down and it touched and it hit the gold, which is a classic 34. So it would come down here, it hit it at +5, and I got out at +2. I decided to go to break even +2. I thought, gee, this is going to go back up, which it did. It then subsequently rolled over very quickly, but I got out with 250 less commissions. This is on a 10 lot. Now this is counter trend trading. Traders, you would have been in on this one as a nice trend, you would have been on this one as a nice trend trade. You've got some trend trades over here. So let's hold that discussion for another time. I just want to show you and talk to you about some of the things I did. So we then had, I jump back in here. This is a really nice divergence trade. Okay, we're getting some nice divergence here. My long-term stoke is falling. I entered in here for 10 contracts, going for 6 ticks. I was targeting down here the 89. Quite often, as you know, we get a bounce on the 89 and 200, come down. I was nicely filled, thank you very much. Now in between, by the way, that's right, sorry, I forgot this trade here, because it's very hard to see. I got out here and I actually did go long here, and I actually went long with 10 contracts, but I used a limit order, and I only got filled on 1 contract, and it went away, and I decided tick back down, and I got out at either 1 tick or break even. I can't remember what it was now. So I actually did get in here, but I was also in late, and so I wasn't happy with the trade. It was sort of one that had gone away. I don't chase my trades. I was only filled on 1 out of the 10 contracts. It ticked back and I got out at break even. Now it worked out to be that it actually ticked up over here up to 4 ticks, but realistically just a tail, so I would have actually had a losing trade probably on this one. So I was not happy. I got out. It's a little bit of luck and experience combined here, traders, that saved me potentially have a losing trade here. But what you got to really watch is this was actually a T89. Just looking at it now, you've got to be very careful in trading against T89. So for members, I want you to write this down, please. Be very careful in trading against T89s. That is, after a T89 is a good signal. Look, you've got one up here, look at this here, it then fell away. What you got to really watch those. Okay, so I got out there at 750 plus less comms. Now one thing here, a couple of comments. The Globex market, and this comes down to who was it that was asking me some questions? Ashley, you are asking me some questions, and I'll cover this again in a members video, just about being filled. Now remember, when you use a market order, you're jumping the queue. So if you go and buy at market, which I will quite often do in a faster moving market, particularly during the New York session, I know I'm going to get 1 to 2 tick slippage, okay, because you're jumping the queue. But when you're trading a Globex market, it's slow enough 99% of the time to use limit orders, which means I can put my order in the system at a price, and usually I'll get filled at that price. If I go to market, I will jump ahead of those orders, pay 1 tick more, surge the market ahead, pay 1 tick more, but I'm in. So this is, but I tend to find it's harder with my style of trading to use limit orders during the New York session. So this is really important there. So Globex session is usually slow enough. So remember, when you're using market orders, you are jumping the queue. Now let me show you this stuff up that I made when I was chatting away. Now the comment I actually had here was this is my justification in a way, and this is one of the things I love about teaching. He who teaches learns twice, and it's really the teacher is the one that has to learn, an old philosophical saying, and it is true. So let me show you what I did here. So I'm on Skype, And this is the same setup that I showed you on the last 2 days at the market open that worked brilliantly, but with a couple of differences. Number one, with those other two setups, you'll notice that there was more distance between my entry and the 89, and there was no pivot. So I jumped in a little late on this trade. I was talking on Skype, so I jumped in, but where was I? Well, I rolled the dice and lost on a low probability trade. I was right at the pivot, and the 200 was right below, and the 89 was in an uptrend, good uptrend. So was a 200, and I had a pivot. All I saw really was this T9 setup, and I jumped in. And to make it worse, I went to go to put my stop up 2 ticks above. Most of you are well aware that when I'm trading, I like to place my stop 2 ticks above your closest swing high or swing low. And Ashley, that was another one of your questions in reference to the NQ. Your NQ 8 ticks, your stop is probably, well, I know it is, it's on a 133. It's going to be too small. Typically I'd have a 12 to 14 tick stop on the NQ, but my stop should have been 2 ticks above here. I miscalculated, and so that was, by the way, going to make it a 7 tick stop instead of my traditional 6, but I actually thought it was 8 ticks. Put that in. I got stopped out up here, and I was still yapping away. And really, traders, I should have scratched the trade, but I wasn't even, look, it was a high risk trade. I paid for it. I just wasn't focused. And so the comments I put there was, really, I was on Skype, took the trade, I was talking for time, I was right on the pivot. The 89 200 were against me and very close together, and when they're close together you get this convergence, you'll get these bounces all the time, and my stop was too large, so that cost me a G on 10 contracts by 8 ticks, what I call a brain snap. And don't forget, traders, pivots are like magnets, so will draw you, and you'll see these bouncing on pivots. Not always, but a good 70% of the time you'll bounce on these pivots. Learn from that mistake, please. But I also want you to learn for some good stuff that I did yesterday as well, so it's not all bad. So let's just move along here and feel some other trades here. Like there was a beautiful 34B right there. Why wasn't on it? Because I just got out of that one, and remembering I'm multitasking. Now that was the word I was looking for before, traders. You shouldn't be multitasking and trading, but fortunately I got some experience to do it. But really, head down, bum up, you just should be focused. So a little comment down here I had, let's get back on the horse. I jumped in on this trade here on a T20. And traders, I'm going to talk to you, my members, in a video, if I remember correctly. There's something I want to point out about why I jumped in on this one early. And there was a reason for it, but I'll explain it in the members area. So we had a T20, so I shorted 10. It gave me a little bit of heat, but then I got a nice T1 signal and a T20 again, so I shorted another 10, and so that was a really nice trade. Very happy with that. We then had a couple of T20s here. These double arrows are what I want to point out, and up here. I'll explain that in the members video. So I jumped up here. I shorted this on a nice T19A, and it was almost a pivot bounce. So you can see here PB means pivot bounce. We've gone up. Yes, it was a nice trend trade. You would have had a nice little trade there. Bounced off the pivot, had some divergence, jumped in, and my target here was the 89, and bang, I was out right on the knocker there. And I was actually perhaps a little lucky, because look at the tail on that one. I was lucky to actually get out and not have to go to break even. As you'll quite often see me with my trades, sometimes and even your own trading, you'll see this, you'll go down, you might get 1 or 2 contracts if you're trading multiple lots filled, and then the market will move against you, go to break even on the balance, and that happens regularly. So that was very nice. Then we had a nice 89B. Remember, when you're taking your 89Bs, traders, to, and even your 200s, to be thinking of targeting your previous swing highs and swing lows as a minimum. This way you'll actually maximize, and you'll pick up a few more pips if you start doing that, and you'll see that works really well. Now here is then this setup again. First of all, I jumped in on this one on a delayed T20 right here. Now with this, this ticked up 5 ticks. I put in a 6 tick stop, my usual stop. It ticked up 5 ticks against me. Then it come back down. I had I think the T1 had formed, but either way I had another T20 formation. I sold another 10. That was a really nice trade again. Remember, the market is quite slow at this time. Okay, so well, that wasn't too bad. There's 5 or 6 minutes there. So I was within where one tick was being stopped out, and this is that formation I mentioned again, the one that cost me dearly, but the pivot is behind us, not right under us. Okay, so that pivot really messed me up, and I wouldn't have taken that trade then either. So that was a good trade. Another one, I shorted again here on this T25, now only for 5 ticks. So this is a T25. You can see here we bounced off the 200 here, we come up, we then had a classic 34B, was also then a T25, and that's what I took it on. Now I'll be really frank with you, the reason I only picked up 5 ticks, we'd had a nice run down, or so it looked at the time. So if I scroll back here, traders, okay, I'm thinking, oh look, it's going to take out, you know, this low. I'm going to expect a big bounce. So I thought, oh look, I'll go for 1 tick below there, and what to do, I punched all the way through. So once again, I let my thinking rule my trading there. I should have stayed in for the 6 ticks. Traders, one thing with trading, and the more often you're in it, once again you can say, well, stay 100% mechanical, but the more screen experience you get, you really do get a gut feel with what the market is going to do most of the time. So sometimes I'll get out early and it was the right thing to do, sometimes it's the wrong, who knows, but you just got to keep rolling the dice. So up here, let's have a look. There was a T20 set up here, but I jumped in on this T89. Okay, now in this particular case I shorted 20 again. Now let me just explain, when I short multiple contracts, I trade only at 0.5% of my allowable bank, so I can actually enter up to 4 positions. So if I get multiple signals, I will actually short up to 4 times, up to 4 lots of 10. So what made this one so good for me? Well, you can see here I had a nice T1, the 89's rolled over, the gold's rolled over, the 8's under, it's a T20, it's a T1, it's a multiple signal entry. So what I did, I got out here at 6 contracts, I then trailed the other 10 here and got out at 8 contracts, sorry, 6 ticks I should say, let me say that again, 6 ticks and here. So that pretty much wrapped up my trading. So I had a very nice day. Then we had just down here, had a beautiful T7. If you had have taken that one, not the 34B, you had a T7. So it was, look, it still was a brilliant day, and very well over 400 a contract just in the Globex session. But the point is, traders, that stay focused when you trade. Remember, what we've got to exercise when we trade is patience, focus, and discipline. So all of this I teach in my Day Traders Fast Track program. I do updates, video recording updates. I answer and follow you up with give you email support. If you're a NinjaTrader user or a TradeStation user, I provide you with a set of indicators. Each day on my Google, each week I should say, I upload new videos each week. So I do trade recaps, and what I normally do is go into more depth for my members. And like what I'm about to do now is go and answer in depth some questions from members. I mean, the sort of things you're going to pick up like this here. This is one of our setups that one of my members has been tracking. As you'll see here, it's 84% profitable overall for the month of March, just this one setup. Now remember, on the chart I just showed you, I was showing you multiple setups. There was probably 6, I don't know how, and I didn't count them. There might have been 5 or 6 different trading strategies there that I used. You only need to focus on 2 or 3. That's all you really need. And there were tons of trades there that I didn't take that were trend trades. So this is a trend trade, and so when you're looking at 84% profitable traders, this is how you kick butt as traders. And this is one of our rules-based traders and trade setups. Let me get this right, it's been a long day. And one thing that Mark Douglas talks about, traders, if you want to master the art of trading, or if you need to retrain yourself, you need to have a mechanical rules-based trading strategy. That is how you make money. You remove the personal discretion as much as possible. As I say to everyone, all of my traders and members, and to you the general public, that our setups are 90 to 95% mechanical. Where does the 10% discretion come in? Well, is the market trending? Am I around a red flag news announcement? So overall, we're pretty mechanical. What you'll also see, and even I know just why I think of it, members, for this is for my members, is I got in on some of those candles before the candle had closed. I strongly recommend that, because you're going to be focused, aren't you, and you're going to be exercising your discipline, aren't you, wait until the candle closes. It's going to also save you some grief and some extra losing trades. So traders, go to my website, subscribe if you haven't already done. What's happened there, I'm not quite sure. Even more so, invest $197 and become a member. And very soon, when we launch our live trading room, you're going to be learning all of this in the live room. Yes, there's going to be a monthly fee for that, but that's optional. But remember, you need to own the Day Traders Fast Track program to also be in the room. So traders, I'll wrap this one up, and look forward to seeing you as a member, and look forward to seeing you on the next video. Thank you.